Good morning. I'm David Lillard, co-chair of the Oversight Committee of the Board of Trustees of the Financial Accounting Foundation. I want to welcome you to this meeting of the Oversight Committee on Monday, November 13, 2023. And today we have, in addition to the trustees that are here in the room, a quorum of the committee. We have co-chair Tim Ryan, who is present virtually, and trustee Robin Washington, participating virtually also. So I want to welcome all to this very good meeting coming up here and everything. We want to begin this morning by going through our agenda here. And one thing I want to do is in addition to the items that are on the agenda, I want to announce that when we get to meeting observation reports, I'm going to report on the meeting of August 7, 2023 of the GASB Committee, give an oversight meeting on review on that. So we'll look forward to adding that to our agenda at that particular point in time. The first item that we'll take up this morning is the third quarter 2023 GASB report with Chairman Joel Black and Mr. Skelton, the technical director of the GASB.
Thanks, David. Morning. Great to see everybody. Great to be here. Appreciate you guys taking the time to hear from us. We're going to start on slide 8 or page 8 of your materials with our report. The report looks very similar to other quarters reports. So if you go to page 10 of your materials, you see the highlights for the quarter. The board did approve our technical plan for the final third of 2023 at our August board meeting during the third quarter. We did add a project on subsequent events and added a pre-agenda research item for gap structure that Alan will talk about later in the presentation. Also during the quarter, we approved an exposure draft for a proposal for a new standard on disclosure and classification of certain capital assets, another thing that Alan will cover later. And then we continue to spend a lot of time on electronic financial reporting. It's classified as a monitoring activity. But we are moving forward with a financial statement taxonomy. We're very early stages, but we've got some FTEs assigned to that. We are beginning to work on it with the hopes that the SEC will engage with us as the Financial Data Transparency Act rules become written over the next several years. But we are, as a team, spending time on that at conferences. I tend to talk about that a lot. People are really interested in what's going on with that, the implementation of that act, which really is not much at this point, as they're still kind of writing rules at the federal level and joint rulemaking. But we continue to monitor and engage with them and spend time on that issue while also trying to do our part and work on a financial statement taxonomy. So moving on to the agenda on page 12 of your materials, this is our overview roll forward of the technical agenda. You'll see a couple of things added. Those are the two that I talked about. The practice issue project added is the subsequent event project, which is what was removed from pre-agenda research, because during the quarter we finished the pre-agenda research. Based on that research, the board approved a project. So that's the one going in and one going out there, pre-agenda research on gap structure again. Alan will talk about both of those in a bit. You can see the one due process document issued on a practice issue project, which was the exposure draft I referenced earlier. The one other removal is conceptual framework project. I'll address that in just a couple of slides. We pretty much covered everything that's on slide 13, page 13. So we can skip to 14 and look at our comprehensive projects. This has had 3 items on it. It now has 2. That's the conceptual framework project for recognition that was removed. That project was really being done in conjunction with the financial reporting model project. And as we reported to you last quarter, there was a decision by the board to take governmental funds out of the scope of that project. We continued that. Last quarter at the very end of June, we talked about taking out the measurement, focus, and basis of accounting aspects of governmental funds. And then early in the third quarter, we followed that up with just taking everything out related to governmental funds, which we had some presentation concepts in, and we had presentation, proposals in, and then we had a conceptual framework project that tied along with it, that added the governmental fund recognition changes that we were proposing in the standard also to the conceptual framework. And so once we took the big chunk of that out in June, it didn't make sense to move forward with those presentation tweaks that really were kind of offshoots of the changes we were making there. And it also didn't make sense to move forward with changing the conceptual framework because we weren't making the changes that were kind of underlying it in a way in the governmental funds and the main project. So we just took that project off, removed it, didn't make any changes to the conceptual framework. And the financial reporting model itself project is the one that's kind of in range there in the green. We do expect to move forward, as we talked about last quarter, with the other targeted improvements. We hope to issue that second quarter of 2024 on schedule. The revenue and expense recognition project is the one that continues to be out of range. I think we are making good progress on that. It's a wide-ranging project. We've had staffing issues along the way. Actually, we finally think we have that team fully staffed at this point. So we're feeling good about it. Whether or not we'll kind of catch up, I'm not sure, to be exactly within range over this 9-10 year project. But we are at least moving forward, making good decisions that I can talk about in just a second. On slide 15, this really covers the governmental funds issues that I talked about and taking the recognition conceptual framework project off. And then if you go to slide 16 on the revenue and expense project, we're in probably the most challenging area for this, and it deals with grant accounting, because grants are really the one that have some aspects of maybe what used to be called an exchange transaction, some aspects of non-exchange. And this is where the accounting gets really hard in the current guidance. And right now, the decisions that are there that we made during the quarter and noted here are keeping existing guidance in a lot of ways, and keeping some of the concepts related to time requirements and purpose restrictions and eligibility requirements. And we are hoping then to make the improvements and simplify the accounting here and make it understandable, more understandable than current guidance when we get the words on the page. We continue to talk about the need for these. They're important concepts. But I think we're certainly, we've made some improvements, I think, already in some of the decisions about separating some of these to make them more distinct and understandable as standalone. But it's really going to come down to how we describe these in the exposure draft to make it really an improvement and more useful to people as they implement our guidance. So we're working on that project. Again, it's a big, wide-ranging project, but we're in the tough stretch now. And I think we're making good progress. With that, we'll get into major projects. I'll turn it to Alan.
Thank you, sir. I appreciate that. There's two major projects we have listed out here today. This will be on slide 17 of your book. The first one being going concern severe financial stress. We've talked about that project before, and really, if you think about our going concern literature, it was pretty much based on the same literature that FASB uses. And if you really think about governments, they don't really cease to exist. So we're trying to define what going concern is, but really, and define that in a more narrow space, that they really aren't going to exist within 12 months of the financials being available. But then talk about severe financial stress, because you can think of some states and some cities and some counties around this country that, while they're going to continue to exist for years, their financial condition is not exactly what we would call healthy. They're not required to disclose anything about that at all today. And severe financial stress is really trying to get to the point of, well, what would it be? And when would certain cities or certain states or certain counties have to talk about their financial health and they're under stress? It's interesting, though, because you say severe financial stress, then we get into how do we define that. And that's where it gets really, really, really sticky, because those seem simple words, but those words need to mean something. And so we're working through that right now. The other projects on here is infrastructure assets. We've talked about that, I think, last time we were here. We did a capital asset research project, and really what it came down to at the end of the day was we think our stakeholders do a pretty good job with capital assets broadly, historical cost, depreciation, they know what they are. But then you think of the government space, you think about what we have that maybe other companies don't. Infrastructure, roads, bridges, sewers, things that exist for a very long time, that have existed for a very long time. And do the current literature actually apply to them as consistently as it applies to just normal capital assets? And so we're really looking at what we need to do with infrastructure and how we need to look at it. And probably at this point, we're probably in a world where we're not really going to ask people to actually recognize or measure it different, but probably look at maybe disclosing it slightly different. In other words, there's very limited disclosures right now on what your infrastructure assets are, how old they are, what their net life, what their remaining life is, how much maintenance you spend on them. You get very little out of that. If you had a government we use examples, but we're trying to get to more information in the disclosures. If you get to the practice issue products that are on, I guess, slide 18 of your slide, there's 3 there. The one that Joel touched on was the classification of non-financial assets. And that was an ED that went out in Q3 of 2023. That really has 2 things in it. They're pretty simple. We've got 3 standards right now about right to use assets, leases, SPIDAs, cloud computing for SPIDAs, and then P3s. And really this product in there is just trying to say, well, in your notes and you disclose within the capital asset roll forwards, how do you need to segregate those from other assets? Simple example, I own a building and I lease a building. Well, I have to roll forward the current additions, deductions, and ending balance of those assets. Do I really want those lease buildings aggregated with my own buildings? Well, no. And do I really want leases as one line? Well, no, because a leased car is different than a leased building. So it's about the level of disaggregation we're going to have in that note. The other thing in there is the ability to actually segregate assets that the government's holding for sale from other assets. So you have an idea of what you do with held for sale assets. It's a very narrow window. In other words, they're going to be liquidated pretty much within 12 months of the financial statements being available. Provide some guidance to be able to separate those assets you're actually going to liquidate. The other one is certain risk disclosures. That's a product we're trying to finalize here actually at the end of the year, at the December meeting. It's somewhat similar to FASB's 275 in the sense we're looking at risks governments face. We got it down to 2 risks: concentrations, constraints. A primary employer, a jurisdiction's got 1 major employer. If they left, government would be in a world of hurt. Or a government is got a constraint, i.e., let's say they've got an income tax cap or a property tax cap, and they can't just raise that property tax millage rate if they want to, even if expenditures would require them to. They can't do that with, let's say, a voter referendum. So they've got constraints in their flexibility to actually manage changes in expenses. That project will be done, like again, December of 2023. Subsequent events, Joel mentioned. If you think about going concern, you think about severe financial stress, you think about certain risk disclosures, they're all dealing with timeframes that are after year end, and in some cases, a period before your financials are issued or right after your financial issued. When we were doing that, we started doing research on subsequent events and realized it probably makes sense to think about that topic right now when we're doing these other projects. Not that there's because there's some overlap. You think about just the time frames of those events, the time frames those sit in, and just really make sure that we're not getting inconsistencies in what one would require versus the other. And hopefully, if you do subsequent events, you do certain risk disclosures, there's a harmony there, for lack of a better word, between the different projects. That we just added. We added in August of 2023, coming out of research. It'll take us a while. We'll get to an exposure draft on that one end of next year. The last thing is implementation guide updates. We continue, as we always will, looking for when we do need to do another implementation guide update. There's not an active project work. Well, the project is active, but we don't have another update due anytime in the near future. We're still looking for making sure we have the right questions. The last thing that Joel mentioned that we would talk about is on your next slide, would be on slide 19, would be pre-agenda research activities. And this is interesting because most of the time we do pre-agenda research, we're talking about a project that could end up being a new standard for the preparers and the auditors to deal with. This one's a little different in the sense that, as many of y'all know, we're one of the few, well, I think we're the only accounting body that has multiple different types of authoritative literature. We have original pronouncements, we still have a COD, and we still have what we call comprehensive implementation guide questions, or Q&As. Well, all 3 of those different documents are authoritative. This product really is to look at our structure and the way we've done it, the way we've historically done it, and look at the way the other boards, FASB included, do it, and look at their structure, their codification versus ours, and really ask the question, what are the strengths and weaknesses of how we do it and how we currently provide it? It really fundamentally asks the question, should we stay in the current structure we are at and still have these 3 different types of authoritative literature, or should we consider moving to a different model? We haven't decided that we're going to move to a different model. This is about, should we? This is about what are the strengths, what are the weaknesses, what are the pros, what are the cons? We're going to try to get that back to the board, and then that may result in us doing a project. Now, that could result in standard setting, because obviously we could change our gap hierarchy. And so there could be a project there to work on, but right now it's just about, should we? Does it make sense? I think folks will tell you there's weaknesses and benefits to the way we do things. I think some folks might think the single codification has strengths and weaknesses. And so we're just trying to figure out what those are and see if it makes sense. And that's the gap research project. I guess we stop now. We're going to do PR now. Stop for questions. I'll touch PR before we do questions, but the PR activities, we are moving pretty quickly. There's a slide on slide 21. It's just a nice visual. Instead of a lot of words, just give you a visual where we are. The green items we've highlighted there are the things we have actually done. It does say for pensions is the one I probably highlight is that we're working on getting the draft of a PI report for pensions to the board in December. This will be the first PI report we will have done since it got turned back over to the GASB. That's a pretty good milestone for us. And we didn't start with a small one to start off with because we went straight to pensions. So that also makes it a little bit of a big lift. But the team is working very, very hard to get that to the board. And we look forward to providing them what that PI report looks like.
Thanks, Alan. And I always like for us to stay focused on what our stakeholders are telling us to spend time on. And so we talked about this last quarter, but it's a good reminder when we go to one of our main input sources is the GASAC, our advisory council. Every April, they prioritize what they think we should be working on. And this past April, their by far two highest noted items were capital assets, which I think infrastructure was the biggest part of that. And Alan talked about that. Since they prioritized that, added that as a project. And electronic financial reporting, which includes that taxonomy and all the monitoring of FDTA. So those are their two highest rated things. There are things that we're working on. Next kind of tier down of the things they said were important, subsequent events, which we also since have added as a project, the financial reporting entity and fund balance, both of which we're going to try to get more detail from the GASAC at our next meeting about, what specifically they're having problems with. Those are pretty broad areas. Other items were ESG, which is something that we do currently. We're monitoring, paying attention to what's going on in that space. Digital assets and environmental credits. Digital assets is on our monitoring list. Environmental credits, it was noted a few slides ago, and I went through it pretty quick. That was added recently to our monitoring list. And the main reason there, environmental credits, things like carbon emissions credits, wetland mitigation credits, et cetera, have been around for a while. We don't have a lot of accounting guidance on how to account for them, but they're not terribly material for governments. And so we haven't really needed it. We have we're paying attention to whether or not and how the climate provisions of the Inflation Reduction Act are or are not being funneled into programs like these. Are they going to become bigger, more pervasive, more material? And as a result, do we need a project to address how to account for them? Think of a state creating these kinds of programs for themselves, creating these credits, then sending them out in the world. How would you value that as they're creating them on their own? And then what if the state acquires them back somehow in order to get them back and has some kind of exchange? Then would it have a different value? Those kinds of things. So we're trying to see, it looks like in our early monitoring, a lot of the credits that are going in that program are more just direct tax credits where the government can file a return and get a refund, which we think really functions more like a grant. And we have normal grant accounting for that. But it's something we're paying attention to see what really comes out of that. And that's why that was added to our active monitoring. And the final thing I'll say, and then we'll see if there are any questions, is kind of internally with our exposure draft that Alan talked about on the capital asset disclosure breakout. We did have an over 90-day comment period that ends January 5th. And we're continuing our electronic input form to try to get more stakeholder participation. So comment letters, obviously, we'll continue to accept, but we have the electronic input form. And our podcast, the Bridging the Gap GASB podcast, everybody click and subscribe. Hope you're watching. Episode 2 dropped last week, and it was one of our project managers talking about this exposure draft. So we're trying to promote the activity related to that so that we get a lot of good feedback on that project. Happy to answer any questions that the committee has.
Are there any questions of Chair Black or Alan Skelton at this point? Yes, ma'am. Yes, Diane Norton.
I've got one or two, but I'll start with one. I was really pleased to hear your engagement with the GASAC led to a reprioritization. Can you say more about, was it capital assets that you said wasn't on your list and now is on your list? And was it because it was going to be a later project for you, or maybe I misunderstood? But I like that seems to be working. That's great.
Yeah, the capital assets was high on the list. We had pre-agenda. They did this in April, and we'd been doing research on this. So it's been on their prioritization list for a while, and we've been working on research. During the second quarter, after they prioritized it again and said, yes, it continues to be really high, we concluded the research, and then the board did add the project. So it was something we already kind of knew was an issue, but their input certainly helps, right? Because the research showed that capital assets by and large accounting was working well. But infrastructure was maybe where the research showed us there were some potential for improvements. And that's so based on comments from the GASAC, and not only they ranked it high, but they go around the room and we hear why each of them ranked high, what they ranked high. A lot of the comments were about infrastructure, not necessarily about capital assets. So that helped us kind of scope that project down from what could have been a little more broad to something that they thought was important and research showed us was important.
Okay, Chairman Jones.
You have Tim on.
All right. Tim, did you have something?
I did.
Tim,
If that's
Tim
okay.
Ryan, okay.
Yeah, thank you, David. Thank you, Alan and Joel. I actually have two very different questions. First one on going concern. What are the different stakeholders and what are they asking for? Alan, like you talked about, governments are going to be around, but what do we hear, for example, from bondholders or the investor community about, what I'll say concerns around ability to pay and credit ratings? Like, what are we hearing from that stakeholder group?
Tim, great question. I think what you hear a little bit is because it's based on the old old FASB literature of substantial doubt, you get different people reading that different ways. You get some folks that literally will say, because a government, let's say constitutional, let's say a city or county government in their state cannot cease to exist. They cannot file bankruptcy. They cannot cease to exist. They will say they can never be a going concern opinion. You will never have that disclosure. Yet that city or county could be in severe financial distress. And so therefore you're never going to get a disclosure because they'll never cease to exist. You do have other auditors sometimes will say, you know what? Yes, they might not cease to exist, but they're still to the point where their financial condition is so bad, we're going to have a disclosure. Well, that kind of gets in a world where you don't really know, are you getting it because you don't continue to exist going concern, or are you getting it because you're severe financial stress? And what we're really trying to do is provide some literature and some definitions that tell you which one they're in. In other words, when they're not going to be a going concern, they're really going to cease to exist, let it be that. But for us, that's much more narrower now. They really are going to cease to exist as a separate legal entity, and then provide that different bucket of severe financial stress to really eliminate that world where people say, I don't have disclosures just because they can't legally go away. Right. And but we get that now in our world where you just won't get it, even though you look at the government and go, how in the world is there not a disclosure? Well, there's not technically one required right now.
Yeah.
I hope that answers that question.
It does. It's interesting. And I have to believe part of the dilemma is going concern is on the governmental entity, not on the ability to pay individual issuances of debt.
And that's an interesting thing you just went to, Tim, because one of the things we will get to, we did this with certain risk disclosures as a criteria. And I suspect, this is guessing a little bit what the board may do. One of the things we did in the risk disclosure framework, we talked about doing risk disclosure at the primary government. But we also stood back and said, yeah, but when you've got a fund, let's say an enterprise fund that has issued revenue bonds, you need to look at the risk at that level of that enterprise fund that has revenue bonds. I somewhat believe we probably would likely do the same thing when we get to severe financial stress. You've got an enterprise fund that's under severe financial stress because let's say they've got revenue bonds as well. So it's probably going to be a primary government concept with that one step down to say when you've got a fund that let's say has revenue bonds where they've got a revenue stream pledged to back those bonds. I suspect we'll go that next level. We haven't done that for severe financial stress yet. We just did it for risk disclosures. So it would make sense. We'll probably do the same thing.
Thank you very much. Thanks.
All right. Mary Barth.
I noticed that Rich is going to talk about environmental credits also as we get to the FASB report. I don't know whether the environmental credits he's talking about are the same as the ones you're talking about, but I'm just wondering about, and you mentioned word government grants, and I know that's something also the FASB has their eye on. Is there room for synergies here for you to share with each other what you know about these instruments and how they work and help each of the boards come to the right decision for their set of standards? Since you happen to be in the same building, it's easy to talk.
It is easy to talk, and we do. I think from the aspect of learning what's going on, like what's changing, like what do these programs look like today and what's changing about them, we are sharing information. The accounting standard itself you come from a different perspective, right? And so the answers and the accounting things we work on might end up being different, but as far as sharing knowledge about what's going on with them so that we understand structure and the different types and what they look like, I think we definitely are sharing knowledge because we're working on, it is the same thing.
Great, that's what I thought.
Thanks, Mary.
All right, other questions? Yes, Manju Ganarwala.
Hey, Joe. I had a question on page 17 of your slide deck. Was trying to understand one of the bullet points under infrastructure assets. The very last bullet says no deferred maintenance reporting. Is that meant to just imply that currently there is no guidance on deferred maintenance reporting, or has the board already decided that there needs to be no reporting for deferred maintenance?
Thanks, Manju. I would say it is both. There is no current reporting. It was something that users told us in the research that they wanted, but the initial board decision has been that, although it's tentative, right? We're still early in the project, has been that something like deferred maintenance is too subjective for external financial reporting. And so our plan now is to is there something else we can give users of financial reports information on that would help them at least get some part of the way there? For example, could we require the government to disclose in the notes of the financial statements the preservation and maintenance costs that it actually incurred this year and maybe each of the last couple of years on those infrastructure assets, so that a user could say, well, you have this amount of infrastructure, this is how much you're spending to preserve and maintain them. That seems like a good amount, or that seems pretty low, and they can ask more questions. So while deferred maintenance might be too subjective as the initial board determination, hopefully we can, as part of this project, provide information to at least to users that will directionally help them understand, is a government preserving and maintaining its infrastructure?
Okay, I have a quick couple of questions too for Chair Black and Mr. Skelton here, and that is on slide 21, your slide on PRR status that Alan addressed on the pension statements, PRR. Do you have a target date for when staff expects to report out on that, or what are your thoughts about that at present?
Two parts: report out to the board and report out to the trustees, obviously.
Yeah.
And to the board, it's due to the board at the December board meeting.
Mm-hmm.
And the next question is when we get to the trustees, is a little bit of new ground for us and how fast we get it to y'all. Part of that, I think, Mr. Chair, will be when we provide to the board what feedback we get from the board in terms of where it is. I mean, if it's really, really good, we're making a couple editorial tweaks, then I think I think the goal is to get the trustees as fast as we can, and as soon as we can, but also make sure the board's comfortable that it's complete and ready to go to the trustees, because at that point it's going to be a very public document. We want to make sure it's ready for the public. So
sure.
I don't have a perfectly locked down time on that, but the board should get it in December.
And as a follow-up to that, this is a new process, as you alluded to, Alan, during your remarks on this. And so do y'all have any general observations about how it's gone from the standpoint of input, not only on that standard, but the others that are up for review as well, that are in earlier stages, about things you think might need to be tweaked or further research done, et cetera,
I think, obviously when we say it's a first for us doing it, since it got given back to us from the FAF, and you're right on that. But I think we're learning through the process. I think some of the things that we're doing are good. I think the cost surveys are quite good. I think the archival analysis is doing well. I just went through the roundtables. We just did 8 roundtables for the OPEB PIR over the last 2 months. We did 5 of them in person and 3 of them virtually across the US. Those are really, really good. The folks are engaged, and we're talking about the topics, and we're talking about the things that concern them. I do think sometimes we have to spend a little bit of time in those PR meetings explaining the difference between, and I don't know if FASB experienced the same thing, the difference between a PR process, which is looking at, did the standard, meet the benefits we expected? Was it the cost we expected? Did we follow due process? Really get into the idea that we answer those questions, which is very different than re-examining a standard. And I think sometimes the folks in the roundtables, at least, we have to level set them a little bit, that we're not re-examining OPEB at this point. What we're trying to ask ourselves is, did the standard provide the benefits we thought it would at the cost we thought it would? And did we follow our process? That might result in us identifying things that actually become a project, but this report in of itself doesn't do that. And there's a little bit of messaging we've had to do on making sure people understand that distinction, because that's sometimes nuanced. But other than that, I think the process is going quite well.
I'm sure you'll look at it in the future with your board to look at how transparency can be increased, and other aspects of it can be enhanced, because the PR process to me is a great opportunity to emphasize the input that we seek from, stakeholders of all types in these standards, and a unique opportunity to take a second look at them, so to speak. So any other quick questions for our GASB leaders here? Yes, Rick Rice.
Thanks very much. You mentioned, Joel, the revenue and expense recognition project, and that's the one that's out of range. And you mentioned, it's about a 10-year thing, and staff have come and gone. And so I know you've mentioned this before, but it's a good reminder, I think, for us. When we have that, where we have a project where staff is working on it and they move on, one, are the notes in good enough shape for the next group to come in and pick up the ball and run with it? And when they do that, is there any sense on how long it delays? Because that's got to be a challenge on those type of projects that are meant to be long range type projects. How does that work?
Yes, we keep good notes. We have very robust
Great work papers.
work papers. We keep everything. We have files and files. I think I've heard that the stack for this project is a couple of filing cabinets. So we keep really good notes, and hopefully that's an electronic filing cabinet now, and not a paper one. Although we still have some paper people a little bit, as much as we're trying to get them more electronic. So it's challenging, but I think we along the way, and you hit milestones too, right? Because you go, you work up towards an invitation to comment, you go out for public comment, and then you work up to a preliminary reviews and exposure draft. So with those milestones, and we've already hit 2 of those on those projects, I don't want to say you reset, because if somebody new comes into the project, they have to learn it. But we do have good notes, and so it can be a challenge on the bigger projects when that happens, and team members come and go.
Rick,
All right. I want to thank Chair Black and Alan Skelton for the valuable report there on the Governmental Accounting Standards Board, the GASB, and we'll move on next to the next agenda item, which is our third quarter 2023 report on the Financial Accounting Standards Board, the FASB, by Chair Rich Jones and Technical Director Hillary Salo.
Great. Thank you and welcome. Good morning, everyone. We'd like to spend the next 20 minutes or so talking to you about our what we've accomplished during the quarter. And I'll start you off on slide 24. And what I believe you're seeing is the results of our agenda outreach that we completed in 2021, brought all of the information back to our board and throughout 1-year period ended June 30th, 2022, and comprehensively reshaped our agenda. We are now executing on that revised agenda. During the third quarter of 2023, you'll see that we issued 1 final standard and 1 exposure draft, but we have more to accomplish through the fourth quarter. In fact, through the fourth quarter, we expect to finalize. We finalized 1 and 3 are in process of being finalized. 4 in total, 4 projects by the end of the fourth quarter that aren't reflected on this chart. In addition, we've added 2 projects to our agenda through today's date that are also not reflected in this chart, and we expect to issue 1 additional exposure draft. So what you're seeing, that flurry of activity, is really the benefits from that extensive agenda outreach and that discussion with our stakeholders. What we'd like to do is spend the next few minutes talking about some of those key due process milestones. I'll turn it over to Hillary. She'll talk to you about some of our projects, what we've accomplished during the quarter. Hillary?
Perfect. So if we can move to slide 26. We did issue a final ASU related to our joint ventures project in August. And this project really provides guidance on how a joint venture should recognize and initially measure the net assets that are assumed upon the formation of a joint venture. So I do want to make that clear. This isn't related to the accounting for those who are contributing to the joint venture. This is the actual financial statements of the joint venture itself. This was a project that we took on because it really was a gap in GAAP. We didn't have specific guidance of how to consider how you should be recognizing and measuring those assets that are contributed and the liabilities that are assumed upon the formation of a joint venture. And that really resulted in diversity in practice. You had some joint ventures that were looking at using the fair value of the net assets, and you had other joint ventures that were measuring using the carryover basis of the venturers. So the board did take on this project to really reduce that diversity in practice and to provide more decision useful information. The board did decide that joint ventures upon formation should apply a new basis of accounting upon formation, which means that the joint venture would recognize its net assets at fair value, with certain exceptions that are consistent with those that are in our business combination guidance. Over the course of the project, we did have 146 interactions with stakeholders, but you can see that most of those interactions were with preparers. And that's because really the main users of joint venture financial statements are the companies that have formed the joint ventures, which are preparers. So that was something that we expected as part of our outreach, that preparers would be very interested, along with practitioners with regards to this guidance. We did talk about this project in 6 of our advisory groups and received 23 comment letters on our exposure draft. I think the feedback that we got through our exposure draft process was very positive. We certainly had a lot of support for moving forward with the project and did make certain changes to the final guidance, including adding a measurement period based on some of the feedback that we heard from stakeholders. So overall, I think we got great feedback on the project, and we're very happy to be able to finalize that project here in August. And maybe next, if you move to slide 27, we have an exposure draft that we issued in July related to our disaggregation of income statement expense project. So really lovingly referred to as DICE here at the FASB. And in that's really from our agenda consultation that Rich mentioned, this was really the top area that was identified as a priority from a stakeholder perspective. And that's really because investors generally are starting their analysis using the income statement. But because of the way that the accounting literature has developed over time, GAAP tends to give you specific information about balance sheet accounts, but not necessarily the income statement. So an investor can't necessarily look at a line item on the income statement and then go find a corresponding footnote that gives you feedback with regards to whether or not that expense is fixed versus variable, or recurring versus non-recurring, or a cash versus non-cash nature. And that's something that we've really heard consistently from investors, that they want that more detailed information to really help them better understand an entity's performance, its future cash flows, as well as to compare its performance over time, as well as with other entities. Now, this project, it's a big project, and the board's considered a number of different approaches over time. But I think the feedback that we got through the agenda consultation process really helped us hone in on what were the types of expenses that investors were really looking for more detail on, what were the most requested types of expenses. And we really heard consistently that they were looking for information related to costs related to inventory, employee compensation, depreciation, and amortization. So the approach that is taken in the exposure draft is to really look at these expenses and break them out of any line item that's currently presented in the income statement. So that means that generally you're going to have additional disaggregation related to line items like cost of goods sold, cost of sales, and research and development, and selling, general, and administrative expenses. In addition, there are other requirements that are in the exposure draft, including having to break out inventory and manufacturing expenses and really break that down more to help understand what's contributing to those costs, as well as companies having to disclose selling expenses and how they define selling expenses on an overall basis. This has been a very high priority, talking with preparers as well as investors, and we've been very actively engaged with stakeholders. You can see that we've discussed this project we've had 168 discussions with stakeholders, and we've discussed this project at 19 of our advisory group meetings before we even issued the exposure draft. So this slide is just related to what we did going up to the exposure draft, but we've really continued to engage with our stakeholders through the comment letter period. Our comment letter period actually ended on October 30th. And so far we have 76 comment letters that we've received. And we've also conducted additional outreach with investors during the comment letter period. So we're really looking to make sure that we have the fulsome understanding from both a preparer and an investor perspective to make sure that we can understand the feedback that investors are looking for and how preparers can provide that in a cost-effective manner.
Maybe Hillary, before we go further on both of these, one thing that I think it's helpful to illustrate is the joint venture project was first addressed by the EITF in 1998 without resolution. The disaggregation income statement project has been part of various standard setting initiatives since the early 2000s. Where we're benefiting is the extensive outreach with our stakeholders, recognizing that finding out what is the most important information to them, what are the paths to successful completion has been very helpful. Now, we're not done on DICE, and it is probably our most controversial project when it comes to different stakeholder perspectives, meaning the investors. This is probably the project they put as the highest priority, and preparers have raised the most concerns about cost and complexity of doing it. But I would emphasize that the outreach you're seeing here, which is a snapshot of the outreach over the recent past, has been very helpful as our board does try to move these forward. Hillary, sorry.
Oh, no, absolutely. The only other thing I would mention on DICE is that we are going to be hosting a public roundtable in December. So bringing our stakeholders together to talk about the feedback received through the comment letter process, which I think we're really excited to be able to understand the different perspectives, have our different stakeholders hear each other, to be able to move forward with regards to redeliberations on that project. So with that, maybe I would just move to other major developments. I think Rich had mentioned the fact that we have also moved forward on important board decisions and are going to be able to finalize guidance related to segment reporting, income tax disclosures, and accounting for crypto assets. We're going to be able to finalize that guidance here by the end of the year. I think that that's really been based on the great stakeholder feedback that we've received throughout the feedback comments on those projects, I would say, as well as the staff hard work. We did issue exposure drafts on crypto assets and income taxes in March of this year, and we're going to be able to finalize that guidance by the end of this year. So I want to give kudos to our stakeholders and our staff for helping to make that happen. We also, as Rich mentioned, did finalize a project, our Duster project, in early October. This really just adds 14 specific narrow disclosures that were referred to us by the SEC. And those disclosures are going to become effective when the SEC removes those disclosures from its requirements. So maybe I'll turn it to you.
Great. Thanks, Hillary. If you move on to slide 29, slide 29 highlights some of the projects on our agenda. And one thing that I think is very helpful about this slide is it illustrates all the different places our projects come from. So, for example, the Profits Interest Project, it's a project that originally came from our PCC, the Private Company Council. And it was an issue they identified in the private company space, but they also identified that it had application to public companies. So it was effectively, while it's a PCC project, we actually ended up taking it on as the FASB board because it had those interactions with public companies. The Purchase Financial Asset project that we have that's ongoing is something that came directly out of our post-implementation review related to CECL. And it was our discussion with investors where they were struggling actually with some of the accounting outcomes of our recently completed CECL project. That's what gave rise to this project. That's why we've added it to the agenda. And those two projects are both in redeliberation phases, meaning the exposure draft was issued, we've gotten the feedback from that exposure draft, and we're currently in the process of processing that information and the board with making decisions. And obviously, to the extent we move to our next due process phase, we'll talk about those more in depth with you folks then. Other projects that certainly get some attention is our accounting and disclosure for software costs. This is effectively a project that we added to the agenda because we had two accounting models for software, both developed many years ago and both somewhat outdated when it comes to the context with which they talk about the development of software projects. Not an easy one necessarily. People have some very strong views on the accounting for software, and it tends to differ depending on whether an entity develops software as part of their business, meaning it's the product that they're marketing, versus those who actually use software in their business. And there tend to be very different views on what would be the best accounting in those instances. So as we look at this project, really one of the keys is what information do investors find helpful? That's the focus of the project. We actually have paused where we are on this project to do more investor outreach and to push into those different types of software and different uses of software to understand really from investors well, this is what you have today. What would be helpful? And maybe getting a better understanding of that. Environmental credit programs is an area that's emerging. It's not an area that's necessarily material to most entities today, but the one thing that we've seen, and I think we all see, because every time that you deal with a business transaction, there's probably some mention of an environmental credit or an environmental aspect to that transaction. It's how do we actually account for those credit programs? These could be voluntary programs where someone tells you when you do a transaction with them, they've purchased a carbon offset on your behalf, potentially, or it could also be the government compliance programs. And we're looking at both facets of that. And this would be an example where we're trying to get ahead of an emerging business trend and a material accounting issue before it becomes broadly material. And then finally, interim reporting. When Joel was discussing a little earlier today about the codification, I put this into this. This is the final step of our codification process. We have a section in our codification that deals with interim reporting. Unfortunately, it's not really clear what interim disclosures are or aren't required. I would have said this is part of the implementation of the COD. It wasn't done at the time. We're doing it now. And to wade through our 5 volumes of extensive accounting guidance and determine over the last 50 plus years, and I say plus years because we also incorporated guidance from the Accounting Principles Board going back all the way into the 40s and others, what was required to be disclosed on an interim basis and what is not as easy a task as you may imagine. In fact, we'll have a very passionate board meeting this Wednesday as we discuss what is and is not required. Flipping to the next slide, you'll see where our agenda stands today. This is actually a copy of what goes on our website. This is as of, I believe, 9:30, so it doesn't necessarily reflect some of the more recent activity that we've been talking about. But just to hone in again on the expected dates, we do believe it's very important to give our stakeholders our best estimate of where our projects stand and when the next milestone date is. And that's why we do this. This is simply Hillary and Maya's best guess as to what we think will happen, recognizing none of those milestones occurs without a majority of our board. But I will say that increased transparency has certainly been very helpful to our stakeholders as they try to plan on what's coming down the line, what will be next.
And if we kind of take it from the technical agenda to our other projects, if you move to slide 32, want to let you know that we did issue our final concept statement chapter related to recognition and derecognition. So this chapter really provides guidance related to the recognition and derecognition criteria. So when should you put in asset, liability, equity, revenue, or expense in the financial statements, and when should you remove it from the financial statements? Over the course of this project, we did have 25 interactions with stakeholders and discuss this topic with our advisory group, as well as a group of academics that have helped us over time with regards to the conceptual framework chapters. And we did receive 12 comment letters, primarily from practitioners, which is pretty consistent with our other conceptual framework chapters as well. Certainly there was support from a majority of those stakeholders to be able to move forward with that project. So we're very happy to be able to finalize that chapter. And that leaves us with one chapter left in the conceptual framework, which relates to measurement. We actually were able to have a successful board meeting last week where the board unanimously voted to be able to move forward with a proposed concept statement chapter on measurement. So we do expect to issue that by the end of the year. So certainly, Rich, I don't know if anything on that.
Well, I will just mention that should we be successful in completing the conceptual framework, it will be the first time that the FASB's had a comprehensive conceptual framework. As a reminder, that's an important tool for the board. It doesn't necessarily lock the board into any decisions, but it does provide us with a decision-making framework and things to consider as we set standards. And I think Hillary and I are both very privileged that we will have been here for 5 of the 8 chapters in the conceptual framework to be completed. So we certainly look forward to celebrating next year the completion of that project. Maybe moving to slide 34, because it's probably not lost on any of you as I walked you through our agenda. You say, well, you have 14 projects on your agenda, Rich. It's going to drop to 10 just with those items that Hillary mentioned is going to be completing. But where did those future projects come from? You'll see highlighted here what's currently on our research agenda, the research projects. But just to give you some insight, the government grants project that's listed here was added to our agenda just recently. We just recently added a statement of cash flows project that came directly off of our research agenda. And previously, our software, environmental credits, and our cryptocurrency projects all came off this research agenda. And when I say they came off it, that meant they were added to the research agenda within the last few years. We researched them. We got enough information for the board to make a decision. Was that a project they're interested in? And I will tell you, at least from my perspective, could you see a avenue to completion on those projects that would improve information to investors? And providing that full blanket of information of projects as they come out of the research agenda has been very helpful to our board. Hillary's going to give you a quick update on the PIR, and then we want to make sure we leave some time for some questions.
Sure. So maybe just from a PIR perspective, we continue to work with our stakeholders from a PIR perspective related to CECL and leasing, answering technical inquiries and other implementation issues that have arisen. But importantly, from a revenue recognition perspective, we actually had a PIR roundtable for revenue recognition last Friday. So we were joined by 20 stakeholders it was a very engaging 5-hour session. I know Lynette was able to join us for a bit of that, which was great, but was really a great way for us to be able to have a discussion, just like Alan had mentioned earlier, with regards to, talking with our stakeholders about the expected versus actual benefits and costs related to the guidance that was issued, what issues arose during implementation, how are those addressed, and are there any remaining issues that may be, apt for standard setting in the future, as well as thinking about the overall effectiveness of the standard setting process and the PIR process. So that was a really important part for us as part of our PIR process as we kind of move from stage 2 into stage 3 of our PIR process to drafting a report related to revenue recognition, which we expect to be able to do next year.
So, and maybe before I turn it back over to Tim for some questions, I did just want to highlight on slide 36, we did have another joint FASB IASB board meeting. It was publicly broadcast. It brings the entire boards of the FASB and the International Accounting Standards Board together in London. We talked through items on our agenda, items on their agenda, items of mutual interest. And this was really just the public meeting, but behind the scenes, the interaction with the IASB, either it's chair to chair or board member to board member or staff to staff, occurs on a regular basis. And there is a regular sharing of information, recognizing that we're all seeking to improve accounting and financial reporting. So with that, Tim, let me turn it back over to you to see if there's any questions. I know we went through a lot.
Yeah.
Any questions?
Good. No, good, David. Go ahead.
Go ahead. That's all right. Go ahead.
Let's just say, Rich and Hillary, thank you very much, and see if there's questions for you from the. Hey, Robin.
Hi, good morning. Can you all hear me?
Yes, we can.
I just had a quick question, Rich or Stephanie, on the disaggregation or DICE project. You talked about this upcoming public roundtable, which I think is great. And is it open, or are you trying to find a balance again between the investor preparer for that type of discussion? Is it more curated? I'm just curious because I think it's great that you had so many investors participate. So how do you ensure that you get that same type of balance at the public roundtable?
So fortunately, Robin, none of our stakeholders are shy. So I think they will all participate. It will be in public. All of our board members will be there, and they'll share their comments. And really the objective there is we certainly hear the different perspectives from different stakeholder groups. This is another opportunity for them to talk to each other. And what is the most important information? What is the best way to get that information? Here's why it's a priority for me, or here's why it's costly, or maybe there's another solution. So it's our chance to bring them together in that public forum. We will make sure all their voices are heard. They will all have that opportunity, and I think if you watch that roundtable, you will see they're not shy. So they will definitely share their views.
And Rich, I might add
I
in.
can participate.
Absolutely. And Robin, just to let you know, we actually went out with a request for who would want to participate in our roundtable. So that was a public request that was put out. We asked anyone who is participating, other than investors who typically don't send us comment letters, to have provided their comment letter by the due date. And then based on that, we've been able to fill the slots for the public roundtable. So we're really excited about that as well.
Do you see, Stephanie, a pretty balanced set of participants like you've had in terms of your outreach?
Absolutely. So we have a mix of preparers across different industries, across different sizes, as well as from an investor perspective with different backgrounds from an investor standpoint as well, and then practitioners from both the large and the more mid-tier firms here within the U.S. So we're looking forward to a really diverse perspectives at that roundtable.
Great, thank you.
The questions in the room, David?
Trustee Murray Barth.
I have a couple of quick questions on disaggregation.
Mhm.
First of all, I wasn't sure on page 30, this chart that Rich says comes from the website. On disaggregation, it says the next milestones and exposure draft. Does that mean you're planning another exposure draft, or is that processing the exposure results from the comment letters and results from the exposure draft that you have already had?
It's because as of 9/30, which is this chart date, it was still outstanding in an exposure draft with comments due by October 30th.
I see. Okay. So
So-
you haven't made the decision not to go to final after whatever you
No.
learn. Okay.
No, in fact, what's it say right now? It probably should say redeliberations
Oh,
at this
okay,
point.
great. Thank you. And the other question is, when you, the feedback you're getting about disaggregation, is this basically a function versus nature kind of disaggregation, or are you thinking, are investors asking for deeper disaggregation like R&D? You just don't want, it seems to me, the nature of the expenses isn't as important as kind of what kind of projects they're working on. What is the type of disaggregation that they're talking, or does it differ depending on what the line item is?
So it's interesting. The investor input when we was along the lines of recurring, non-recurring, was fixed versus variable and cash versus non-cash. While we can define the cash versus non-cash, the fixed versus variable and the recurring versus non-recurring tends to be in the eye of the beholder. And trying to draw a line between those, because at the end of the day, almost every cost is variable. If you have no operations, you probably shouldn't have any costs. But how do you draw that line and how do you reflect that? The other challenge that we had was when you look at income statements, they're not all the same. So if you talk to someone who follows financial institutions, they have this breakout by nature, as you mentioned. So they have the compensation expense, they have the different expenses by the nature of the expense incurred. Versus if we pull other commercial companies, we may see 3 line items in the expense category, one of SG&A, one of R&D, possibly, and cost of sales. So how did we approach this at once? And recognizing we have this large volume of literature. So what we were really focused on was, how do we get a meaningful tie out or a meaningful detail for those income statement line items by not harming those who are already providing that detail, but getting that breakout for those where it's overly aggregated? And how do we tie that to our existing disclosures? So it is I will say by nature focus, because we say if there's the presence of certain items, those categories need to be broken out. And it was a way of dealing with all different kinds of income statements and recognizing we didn't want to make those who are already providing that information go through another project. But how did we do that? And this is our attempt to do it. And we're getting lots of feedback on that.
The questions, yes, Brian Lewis, trustee.
On slide 36, one of the feedback themes, I think, from your educational meeting with ISB is the different pace of standard setting. I know that's something we've been talking about over the past few years. Could you say a little more in that takeaway and that feedback and maybe some of the differences or improvements that FASB can own and that are different from ISB?
Yeah, and well, we did work with the ISB on our 3 major joint projects in varying degrees over the past decade. Where we are now is we have our agenda that's focused by that outreach, and we're moving ahead on it. I would say it's fair the ISB has other considerations, including with the introduction of the ISSB and sustainability standards, and what does that mean as how they work together, that I think influences it. So to the extent we have projects that are similar, we're certainly sharing information, but we're not necessarily holding them up to allow them to move things from their research agenda to their technical agenda. By the same instance, they have certain projects that they're moving ahead with, right? So I think we're cognizant of where each other are, but I would say if you look over the last few years and you look at our projections, we have more projects that will likely be finalized.
Rick Reisig, trustee.
Thanks. And I was wondering if I had a question here, and I think I do, but it's more of a comment, and it's on the environmental credit programs. And really, when I saw that on there before, and you try to incorporate a lot of what's happening to what I do, right? That's how we all process it. And I never really made the connection until I was we had a tax class last week, and we were going over environmental credits and the transfer of environmental credits, and the light bulb finally went off for me, in dealing with our auto dealership clients and the trading of environmental credits. And I thought, this is what it's after, and this is what it's attacking. And maybe the question would be, how does this stuff come to you? And I know we have, whether it be the PCC or EITF or someone just driving to work and saying, you know what, I bought a hybrid and I got an environmental credit. And how are we going to account for that? I mean, and so kudos for attacking this and being proactive, because this will be a big deal on how entities try to report it. And so maybe my question first, good job. And then my question would be, how does this come to you?
Yeah. And we do benefit from having people from lots of different backgrounds. So some of us who've spent time in the oil and gas industry know that there have been credits like this for years, and they're simply expanding into other industries. So I think that's certainly helpful. But the other part is that extensive outreach with our stakeholders. And we ask them not only what are you worried about, or what could we improve today, but what do you see coming down the road? And so that gave us some insight into this as part of our agenda outreach process, that this was an item that people were faced with today. They were having to make journal entries today. And would there be benefit for some standardization and guidance on financial accounting and reporting? So a combination of factors, right?
Okay. Anything further? All right. Yes. Do we have anything else? Tim, did you have anything?
Yeah, I did. Thank you, David. Rich and Hillary, I think I have two comments and then a question. So if you bear with me, I do want to thank you all on the board and the staff. We've talked in this room for a couple of years just about the need to be responsive to what we're hearing and then have a purposeful agenda. And that's what we're seeing in front of us. It's not an accident. It's because of the hard work and the focus. And I want to thank you all for that publicly, the listening and then the work and making it happen and executing. That's my first comment. My second comment is more just in support of the disaggregation project. And it goes a little bit where Rick was just going. The reality is many companies are remaking themselves right now. That in a digital age, whether you're in banking or manufacturing or almost every industry, and it does put both a real need for transparency as investors try to figure out how companies reinvent themselves. And it also does put additional costs into the system. But it is important from a transparency perspective. We're in this really unique period for the next decade or so where every company is going to reinvent themselves, and therefore more transparency around recurring, non-recurring, cash, non-cash becomes more important in this day and age than ever before. I think it just puts an emphasis on this project to help investors understand what is happening. So I'm supportive, but I want to pull it up a level, and as companies reinvent, this transparency becomes more important so investors can judge, what's working, what's not working, and how they think about the company in the future. That was my second comment. Now my question. My question is on the income tax one, final standard expected in December. Rich, I know you and I have talked, but it would be helpful for the committee just to hear, some of the feedback as you get ready to land that standard, as you've gotten that standard pretty close to final standard in December.
And I would say from the investor perspective, the feedback's been very positive. And one of the reasons that we took the project on and finalized it so quickly, trying to understand a complex multi-jurisdictional tax provision is tough. And it was a blind spot for many investors. And it was because the information simply wasn't there. We focused on information that a company should have and should underlie their existing accounting, and providing that in a more standardized and additional detail format to provide investors that information. We've heard very positively about that. Anytime we touch a project that has the word income tax in it, it gets a lot of passions excited though. And to be fair, right, there's some who have an interest in this area for more public policy purposes. And there's others who are focused simply on the capital allocation. That's what we were focused on, capital allocation. Some raised those concerns. We had extensive discussions with them to share that it was an investor-led project based on people who will use the financial information to make capital allocation decisions. I think providing that insight and that transparency to those folks has certainly helped. And I think many of them certainly understand why we have the project at this point in time.
Okay, we want to thank Chair John.
Thanks, David. So good morning, everyone. Our last PCC meeting was held in person on September 11th and 12th. At that time, the PCC also had a closed meeting with the Technical Issues Committee of the AICPA as well. It's a session that's held annually to share information on private company issues. The PCC report is in your materials beginning on page 38, and the meeting agenda and recap begins on page 114. At the September meeting, the PCC discussed some recent decisions by the FASB on the accounting for and disclosure of crypto assets, as well as the improvements to income taxes disclosure projects. Both Hillary mentioned in her previous report and Rich planned to be issued in the fourth quarter. There was also a report out and discussion following the PCC's meeting with TIC. The primary topics discussed with TIC included the status of CECL implementation by private companies, lease implementation issues, accounting for safes, which are simple agreements for future equity, accounting for debt modifications, and the stock compensation disclosure research project. There was also a continuing dialogue with the FASB and PCC on post-implementation review activities on leasing, and the FASB staff and PCC working group members provided an update on the research on stock compensation disclosures. There continues to be very good dialogue amongst the PCC members and amongst the PCC and the board. Turning a moment to town halls, the PCC discussed a summary of the feedback from the town hall held in conjunction with the AICPA peer review conference in Philadelphia in August. Myself, Candy Wright, Adam Roark, and Dave Pesch attended. There was good discussion on a variety of topics. In October, I know it's outside the reporting period, but it's very recent. The PCC also had a very productive town hall with the Risk Management Associates, which is a group of lenders to primarily private companies. There'll be an update on the dialogue at the PCC December meeting. And then the FASB also met with the AICPA, ASB, AITF in October on a variety of initiatives underway on improving audit standards. And FASB and PCC activities were discussed, which we will also report on to the PCC in December. So the next meeting with the PCC will be held in December in Norwalk on the 14th and the 15th. The December meeting will also be Candy Wright's last meeting chairing the PCC. And as her term draws to a close, and since this is the last oversight committee before the end of the year, I just wanted to say on behalf of the FASB and the staff that we've thoroughly enjoyed working with Candy and supporting her efforts as chair of the PCC. So with that, I'll just pause here for any questions.
Let's do this. Let's get IC trustee with his report.
And I'll be quick. And thanks very much, David, for that. And Sue, I just had, as I usually do, just try to bring observations of participating as an observer in the meeting. I have three things. One, once again, I thought the users were outstanding as far as participating. They're not a shy bunch, and they bring a lot of conversation to the group. So good job with selecting those folks. I think they're a good group. And the PCC, all in all, was a very good meeting, very interactive from both the FASB and the PCC side. Secondly, I do have to fess up to David and Tim. I did the unthinkable, and I unmuted to participate, but it was because Sue double dog dared me. And it was a part of the conversation on the town hall, and they got responses or questions about big gap, little gap, and the effectiveness of the PCC. And so I had to email Sue and said, I want so bad to get in on this one. And she said, well, man up and get in. or at least that's how I took it.
I didn't
And,
quite say it that way.
And so I did, and because I couldn't take it anymore, I had to pipe up. And so I fess up that I did that, and I should not have. And I apologize for doing that, but I couldn't take it. So I had to join in. And lastly, and I mentioned to Rich that I was going to comment on this, and maybe it's because it's close to Jim's term being over, but you know, one thing about Jim Croker, he does a great job about supporting the PCC and not only providing feedback, but encouragement and suggestions for things that they should think about. And that was one of the things that I noted, and I've noted it before, but this time it struck me again that Jim was very good about that. Jim Croker is very good about that. And so I just thought I'd mention that. That gives some sense of the feedback that FASB and the PCC have and the support that FASB members have for the PCC mission. So I just thought I'd mention that. So that's all I have.
Okay, so you were just the moth to the flame. You couldn't resist. That's the bottom line of that, you know. Okay. Well, let's see. Do we have any questions of Sue Cosper, FASB board member, or Rick Reisig, trustee, and their reports here? Mind you, did you have a question or anybody? Okay. All right. Thank you for those very good reports. Let's see. Trustee Brian Lewis, did you have a report for us on a meeting observation here?
Yes, I had an opportunity to attend the GASB meeting September 19th. And I think the takeaway, so I actually followed the rules, Rick, and did not participate. But what I found from very insightful was the engagement of the GASB staff with the members in the room. Not only did the board come to the meeting very prepared to talk about each issue and their perspective, but the team was very thoughtful and engaging, and I think detailed oriented and entrenched on the issues. And I found that process with each member going around the room, having an opportunity to ask very technical questions and get very technical feedback. And in many cases agree to disagree, to do a little more research, to come back with more information on very critical topics that have been discussed by Joel and Alan already, particularly capital assets. And I took away, you know, the various sizes of the government entities and many of the considerations that have to take place on implementation of guidelines based on the size of both municipal, state, and other regional governments was very well done, very thoughtful, and I look forward to attending again.
Okay. Questions of Brian Lewis, trustee, of his reports here? Okay. Thank you for those good reports and all. I just wanted to report briefly on my review of the audio tape from the August 7, 2023 Governmental Accounting Standards Advisory Council meeting. The GASAC meeting in Denver, Colorado was held in conjunction with the American Accounting Association annual meeting. You may recall from previous meeting of this committee, that was the one I was going to attend in person along with the GASB meeting that was held a day or two later. But my wife had an accident that I had to remain in Nashville for, so I couldn't be there personally. But I've since reviewed the tape of that meeting, and, you know, Chair Beth Pierce did an absolutely wonderful job of presiding over that meeting. And as many of you know, I have an 8-year history now of either being on the GASAC or observing GASAC meetings. And I'm just greatly heartened by the progress that has been made over the years that's reflected by the current meetings in terms of the depth of discussion of the issues, and they really got into the issues, and the participation that occurs. We had 21 members of the GASAC present at that remote meeting, plus 6 GASB board members. Chair Black and Technical Director Alan Skelton participated fully in the meeting, along with other board members of GASB. And the staff prepared obviously very wonderful materials, because there were various discussions about the 27 pages of materials on a particular issue that they were going through and looking at, and how helpful they were in terms of resolving the key issues that the GASB board members had laid before the GASAC and everything. I can go through a number of things, that issues that were addressed during that meeting. But what I would like to do here, in lieu of that, in lieu of time, because we're a little bit over time on our meeting here today, is just simply say that I think with the organization has gotten to the point generally with all of our meetings where we need to go to the next level in terms of making things available to the public that are listening to our meetings. And that includes during the meeting like today, I've tried to refer to people in some way to identify them completely when you're called on to speak, because many times during these meetings, we will refer to each other as David or Joe or whoever, and we know exactly who that is, but the people who may be listening to the tape later or listening live, on the webcast don't know those folks. And so, it's hard to get a view as to whether the person speaking is a trustee or a board member or staff member, whoever they are. The other thing is the materials for the meeting. It's like the wonderful materials that the GASB staff prepared for this particular GASAC meeting I was talking about. Those materials need to be made available on our website simultaneous with the audio that's being put out on a public manner so that a person can look at. They referred to charts that were in there that were obviously the staff had spent a lot of time working on them and everything. And there's a need to get those in sync so that they're available in real time to people listening, and also available to people that are listening to the tape backup of it at a later date and everything. And then there are some things about our website, like for instance, on the GASB side, the GASB has its website that has the audios of their meetings on there, and the GASAC meetings are interspersed in those audios. You can see the entries of it. And there's a need, I think, to make sure that the instructions about it all are pretty clear and the location of it is very clear. And further, like on the GASB website today, there's a statement that the tapes are available for 90 days. And it gives the impression that they're not available after 90 days, but we have a situation here where, they're available back, at least on the part of the website I looked at, into February, so they're obviously available for greater than 90 days. Should they be available permanently or at least much longer than 90 days? I would think so, because I would think that academics wanting to do research or others, wanting to look at this, and members of the public would be benefited by having that material available for a good while into the future. It doesn't mean it has to be there permanently, but it has to be there for a longer period of time. There are a lot of other aspects of that, and I'll just ask if there are any questions that any member of the committee has at this point about the meeting on August 7, or maybe Chairman Black or Alan Skelton has a comment on it. Anything? Yes. Alan, did you have any comment?
The only thing I will add is I believe, and I'll look at Hillary says, I think you keep the stuff out there for a year. I think the FASB does. And I think when we were going to the new website, we're about to do the same thing. So I think one of the things you just mentioned was our meeting, our videos and stuff being out for 90 days. We're about to move to a year when we go to the new website, simply because why was there a difference? And that didn't seem to make sense. So we're about to leave those out there for a year. And I do think a lot of times too, the stuff that's not on the website, there's a whole lot of stuff not necessarily on our website. There's still permanent records that still folks can ask for, and we will provide. And so there is a little bit of a balance of what you keep on the website versus what you actually keep. But the meeting minutes, just for example, we're about to move to a year.
Right. Well, that's beautiful. And I just want to comment that, again, my discussion on this point is not in any way a criticism of the current efforts, because the boards, the various boards and the staff have come a long, long way over my association time with the FAF and the GASAC and all the rest in terms of making these materials available to the public and increasing transparency. And I think it's increasing the confidence in the work of the boards. And we want to continue that trend. So it's just simply an incremental thing, or we stand on the shoulders of previous efforts and want to add to it incrementally in terms of progress as we go forward. All right, is there anything else today to come before the Oversight Committee in this public meeting? Co-Chairman Ryan, did you have any closing comments?
I don't, David. I thought that was well said. Thank you very much, everybody.
All right, very good. Then we will adjourn at this point the public meeting of the Oversight Committee and wish everyone a wonderful day. Thank you.
Thank you, everybody.